The purpose of Rewake videos is to be able to help people make better decisions when it comes to their finances. And as Rewake, we don't insinuate or rather propose that we are there yet, but we try, as we journey towards becoming financially free and being successful in how we manage our finances and how we are able to diversify our portfolio. As we are on a journey to there, we want to be able to share the things that we learn throughout the way with you. And one of the things that you have heard me speak about, and you have heard me repeat over and over again, reinvest your dividends. You have heard me over and over again talking about ETFs, stocks, investing, how to journey towards becoming a millionaire a cheaper way, talking about cheap shares or affordable shares and so forth. We spoke about a lot of things, and as time goes on, we want to be able to get even deeper to the information and break down things so that people can be able to have the full knowledge of the particular things in investing. But today, I thought about what I spoke about once, that do not touch the principle. And a thought came in mind that we need to understand the basic thing about investing. We need to understand the basic thing about investing. And here's the thing about investing. And we're going to start from here. Actually, we're going to talk about this, right? When you take 1.2 million cash and you go to the bank, actually, you don't go to the bank. If you take 1.2 million cash and you see a house that costs, say, 1.150 mil. So when you see that house and you want to purchase it, there are things that you need to look at, like lawyer fees. You go view the property, you like the property, everything's fine with the property, the way they valued the property is correct and so forth. So now you have to pay for the lawyer fees and so forth, blah 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 blah. So buying the house maybe costs you about 1.180 or so. So you buy the house. So here's the thing. The money that you have spent, the 1.2 million that you have spent buying that house is gone, right? It's gone. It disappeared. It's no longer there. The only thing that you have is an asset that represents the 1.2 that you used to buy the asset, right? I hope you got that. If you didn't get it, please rewind. See, you spent 1.2 million buying this house. The 1.2 million is gone. It disappeared. It's no longer there. The only thing that you are left with is an asset that represents the 1.2 million that you used, right? So that's why they talk about the worth of the house. This house is worth 1.2, and the value might increase or depreciate, right? Depending on the economic structure or how things are happening or going in the country at that moment. You might find that, you want to sell the house, but it's a when it comes to property, there's this thing, the seller's market, the buyer's market. So you find that you want to sell the house, but you're selling it in a wrong time. So now you're no longer in a buyer's market. So when you sell your house on a buyer's market, you might sell it 1.2, but sometimes you might sell it even lesser, depending on the economic structure of the country at that point. So what that means is that, say that you want to sell the house and it's the country is not doing well and it's a buyer's market. Let me just put it like that. It's a buyer's market, or the country is doing well and it's a buyer's market. So now when you sell that house, you sell that house 1.1 million. So that means that you have lost 80 to 100,000 rand. That it's gone, you know. So you lost, right? So it's the same as investing. Or you sell in a seller's market. We are currently at the seller's market where the country is not really doing well and it's trying to break through and so forth. And now whoever buys a house now is taking, especially when you're buying with a bond is expensive now. You know, you're risking a lot. You're going to lose a lot of money. But if you are buying a house now and it's a seller's market, you might sell your house 1.5 million to 2 million, because now it's the advantage is in your court. But people that know more about property can educate us and speak at the comments below. But I hope you get where I'm going. There are times and seasons whereby you can sell the property that you bought. You know, if you wanna make a profit, you have to wait for a proper time for you to be able to sell that money, that asset, that house, so that you can get money that you need or that you want. So now we look at investing. When you invest, the same analogy. When you invest, you are, for instance, investing in Absa. You're buying stock in Absa. So you're buying a particular number of shares in Absa. Say you buy shares that are worth, 5 grand, for instance. You buy shares that are worth 5 grand. So that 5,000 rand is gone. It disappears. Yes, you can see it on your notes that these shares, when you bought it in the beginning, they were worth 5,000 rand. And now 6 years later, the shares are worth 6,000 rand, or 7 or 8 or 9 or 10,000 rand. But you know that in the beginning when you bought it, it was worth 5,000 rand. And saying Absa has been doing well for bad in the next 5 years, doing bad. So now the share price now went down. So that means that your stock now, they will tell you that, hey, when you bought it 5,000 rand, but now the share price went so low that your, the shares are worth 1.5. So you know in your mind that when you take out the money, which we call the principal, and you invest that 5,000 rand in Absa and you buy those shares, when you look at that money is not there. It disappeared. It's no longer there. It's no longer there. It's not like you can tap in and you would find 5,000 rand immediately. You know, it depends on how the company is performing. That's why we have people that are called short-term investors and long-term investors and medium-term investors. People that know when to make profit when they invest in a particular company, or when they invest in a particular currency and so forth. So it's the same thing as purchasing a house. When you spend that 5,000 rand to buy a stock or buy shares, that 5,000 rand disappears and you are left with an asset. What's your asset? The particular amount of stock that you own in that particular company. And should the company do well, that means your the money that you have invested matures, right? Matures. The shares matures. So now when you withdraw the money when the company is doing well, then you will have a profit, whether it's 50 rand, 100 rand or plus. That's how investing works. So if you were to invest today, that's what you should have in your mind. That's why we say don't touch the principal. Don't touch the principal. Especially, I've been saying for the past couple of weeks, when you invest at the beginning, try investing in dividend paying stocks or companies or ETFs or portfolios. If you invest in anything that gives dividends, then you know very well that whether on a monthly or 6 months or 3 months or 12 months, you will get paid, you will get a profit, you will get a dividend. And I said to you that you need to be able to reinvest those dividends so that your shares in that particular company get to mature, the stock that you own get to mature, and you get to have more money, right? So that's what I advised you. And today I want to tell you this, and I said this once: do not touch the principal. You see, that 5,000 rand that you have invested, it disappeared. It's no longer there. It doesn't exist. You are only left with an asset, which is the stock that you are hoping that this company will do well in order for you to be able to your portfolio to mature, your portfolio to make you a profit, your portfolio to be able to make you a lot of money, whether in dividend returns or when you get your money, your returns in a couple of years, or whenever you take it out. So that's what you have. You have an asset. Your asset is the stock, and you are hoping that it will grow, right? That's why when you invest in, for instance, Absa, you listen to the news regarding Absa, you read about the new CEO, you look at all those things, because you are an investor now. You are not just a normal Joe. You are not just a normal person who works in that company or whatever, but you are an investor. You care about the vision of the company. And if you want to have a huge say, you will keep on investing in that company so that you can be able to have a seat and be able to have conversations and be able to walk in and be able to have an impact and have a voice regarding the particular company that you have invested in. Right? So my idea, my passion is to be able to grow in terms of my investments and be able to have more money coming in from my dividends that are coming in from my investments to take care of my life and my future goals, and be able to reinvest in future and not and have make a decision whether I want to work or not. I want to be able to be free to make those kinds of decisions, because for as long as you are depending on a salary or depending on a passive income, you are still, for lack of a better word, a slave to that income that is supposed to come every month. So now you don't have an option to be able to say, hey, I want to be able to grow in terms of my finances. I want to be able to you don't have the option to say that I want to invest all my money. I want to be able to, you're always taking risks, and that's what investment is all about. And the more you take those risks and the more you invest more, the more you chase after, the more you get to that chance to be able to invest for millions. And that's how investing works. If you have ideas, if you have opinions that you want to share, please write them down below, because it's important for us to be able to exchange ideas. You see, I'm not a fan of those people that say get rich quick, because I know very well that it doesn't work. See, if you want to be able to build a long-lasting financial gain, a long-lasting profit, financial freedom, if you want to build that for your family and for your life, something that is stable, that you know will always be there, and something that you know that you can multiply it and bring growth in it, you can start here, understanding that when you invest, you have to go in with all your heart and be able to research about the company that you invested in and be able to keep tabs so that you can be able to grow in the knowledge that you have in that company, so that you can invest more. And when you invest more, what are we talking about? You take that 100,000 rand that you have and you invest it. And when you invest it, for you, it disappears. Yes, you are getting dividends from that, but it disappeared. It's no longer there. Yes, you're going to get it back maybe when you withdraw it after a couple of years, when the company is doing well and so forth. Yes. But then at the moment, it doesn't exist. If you look at your investment career like that, then you have a future. When you are going through financial constraints and your wife or your husband says, love, can we tap into our investment? You say that, No, but we are not in a position whereby we can tap into that because the economy is not doing well. If we tap into it, then we made a loss. Everything that we have invested, we made a loss. So you make them understand so that they can be able to see that, hey, let's wait. We can lose the house and live in a smaller house. We can lose the car and take public transport. But those dividends, when we release them starting from a particular time, or when we take back our investment when the economy is doing well and the company is doing well and so forth, then would be able to live the life that we want to be able to live. So guys, that is basically what I'm trying to educate you. When I say don't touch the principal, that's what I mean. When you invest that money, see it as it disappeared. It's no longer there. You are only wishing for the company to do well. You are only wishing for the company to make profit, to grow, to be able to give you dividends that are substantial, and so forth. So that's how investing works. So as a beginner, you need to be able to understand that. Once you understand that, then you are free to be able to grow in your finances, grow in financial freedom, grow in financial literacy, because you're beginning to understand that, hey, if I want to call myself an investor, then I need to be able to be intentional about it and say that I have invested, that money is invested, so therefore it doesn't exist. I will get my dividends when dividends are paid out, or I will reinvest my dividends, whether in that particular company or in another company.